So let's begin the paper 17, cost and management. Subject is actually cost and management audit, CMA. See, earlier, and I mean, how many of you are CA intern or CA studied CA course also? Okay, fine. Cleared CA intern? Yes. So you might have already seen, even in CMA intern for that matter, CMA intern you have paper 10 part B, which is also dealing with audit, just audit. That subject name is just audit. It's not cost and management audit, it is just audit, where predominantly they spoke about statutory audit from Companies Act perspective. Financial audit, that is what predominantly they spoke about in CMA inter audit also. Whereas in CMA final audit, here we are predominantly discussing cost audit, management audit, and actually if you see, the subject is divided into multiple parts. You can find this breakup in CMA Institute study material also. You see, we totally have in CMA final 18 chapters, which is broadly divided into 4 sections. The entire 18 chapters are categorized into 4 sections. And in CMA final study materials, no, they won't call it as chapter, they call it as module. Module 1, module 2, module 3, likewise module 18. Technically, module means a separate book, but here they refer chapter name as module. So totally 18 chapters, nothing but 18 modules divided into 4 sections. Okay. Now if you see, cost audit weightage is almost 50 marks. And you know what? In CMA, the specialty is whatever the weightage pattern they give here, right? They follow exactly. They won't deviate from this. 99.99% they follow exactly. You will get every one question from every chapter. 7 marks weightage will be there pakka from every chapter. 5 marks are at least 4 marks, or 5 marks are at least 7 marks. Either it can come in MCQs or it can come in descriptive, wherever. Now, so like this, they divided into 4 topics. And if you see the subject name, it only talks about what? Management audit. It talks about management audit, and it also talks about cost audit. Whereas we also have in our subject 2 more elements: internal controls, forensic audit, and anti-money laundering practices. So what are all the laws across the world, and what is the law in India for prevention of money laundering? So a brief overview about money laundering law. So this is the composition of CMA final audit syllabus. Cost and management. Cost audit we have, management audit we have, controls related discussion we have, controls and internal audit. That's what the section C is about: internal controls, internal audit. Okay. And finally section D, which talks about forensic accounting or forensic audit and money laundering related provision. This is the entire syllabus. Now you know how the paper will be like coming for? Your paper will be for 128 marks. Your paper will be for 128 marks, where 30 marks is for MCQ and rest 98 marks is for descriptive. And within this 98 marks, you have 28 marks, and balance 70 marks is what you're supposed. Now, if you see, these 98 marks will be given over 7 descriptive questions. 7 questions will be. This is something similar to CMA Inter only. CMA Inter also have a similar paper pattern. So in the final also the same pattern is continued. 7 they will give, where each of these question carries 14 marks. Again, in these 7 questions, no, sub questions might be there. 7 marks each, like 2 sub questions will be. Okay. So 7 questions into 14 marks is equal to 98 marks. But you need to write any 5 only. You need to write any 5. 2 questions choice directly. Straight 2 questions out of 7, any 5. There is no such thing called compulsory question. In CA exams, if you see, descriptive paper, question number 1 is a compulsory question. Compulsory question means simple. Choice is not there for that. It's not that student has to must and should write the answer. No. Choice, for choice purpose, this question will not be considered. That's what compulsory question means. Like that, in CMA, we don't have. So out of 7 questions, any 5 you can write. So each of that will carry 14 marks. So Each of that will carry 14 marks, 70 marks by 5, getting it. So that's how you have 100 marks of the total paper with choice 128. Now for a better idea, so I will first show you how the paper will be. Now again, by the way, one more misconception many students have regarding cost audit. They think cost audit is a practical paper. 90% is theory paper. The weightage, I mean, like if you see out of 128 marks, the practical questions weightage will be 25 to 30 marks. The practical questions weightage where costing related sums will be given. It's simply costing. Whatever you learned in CMA inter costing is there, right? That's it. If at all you are very good in CMA inter costing, not even management accounting, cost accounting, if at all you are really good at cost accounting, 30 marks are straight away with you. A student who is really very good at cost accounting at CMA inter can directly go to CMA final audit paper and write easily for 35 to 40 marks. Easily he can write for 35 to 40 marks. Problems he can write 25 to 30. Some provisions he can write for 10 to 50. So technically for cost audit paper, you can directly go to the exam with the costing knowledge and CMA inter audit knowledge. With these two subjects knowledge, you can easily write 35 to 40 marks of the paper. 30 plus you can write pakka. Okay. So now technically we are supposed to work for the remaining 90 marks. Out of 128, let us assume 30 you are able to, you're already perfected. Another 90 marks is what we are able to, we have to work out. Now if you see CMA final group 2, what are the subjects that are there in group 2 CMA final? Paper 17 audit, 18 CFR, 19 indirect taxes, 23 options were there. SPMBB startups, and there is another paper, risk management. Okay, some 3 papers were there, A, B, C, some choice. Okay, now if you see CFR is bit tough. CMA final CFR will be bit tough because you are exposed to that subject for the first time. At CMA inter level, in days you have, right? In days is there, but brief discussion only will be there. At CMA inter level in corporate accounting, group 2 paper, again that is paper 10 part A. CMA inter paper 10 part A, corporate accounting is there, where in days discussion will be there at a brief level, but advanced level you will see in CFR. So in entire group 2, 2 tough papers are CFR and this one IDT. These 2 are tough papers technically. SPMBV you can manage, and cost audit is high. If you really work for this, you can easily cross 70 plus, 80 plus also. In we will discuss concepts in such a way where you can first understand all the concepts, not just from exam point of view, but also tomorrow when you're going for interview, any sort of question they ask, your answer should stand out. Like many CMA students, one attitude what I find in them is, they only think of, okay, CMA is a bit easier course compared to CA, and even if you work little bit you can qualify easily, but they don't think about interview post qualification. They only think about passing the exam. You know what makes difference between just studying for just passing the exam and studying for knowledge plus qualification? Entire CMA final, if you see, it is just 100 hours different. You are just studying for only to pass, and if you want knowledge and also success in exams both, the difference is 50 to 100 hours. But you know what, we are the only one, I can tell you, who can give you in lowest number of hours classes. We will give in the lowest number of hours. The total number of hours for our CMA final audit will be somewhere around 80 to 90 only. CMA final audit will be 75 plus to 80, 90. Worst case, 75 minimum it will come, 70, 75 it will come, maximum 90. You know, within this, what are we going to do? Discuss each and every concept in depth. We solve many problems. I will also explain regarding some costing basics also. When we are discussing costing related portion in this, we'll be discussing some basics also. And we will also revise in the class itself. We will be doing revision also. At the end of every chapter, I will brush up entire all the concepts. I will once again briefly revise. At the end of every chapter, I'll do that. So that's how the approach is going to be. So target not 50 but 80 plus. And I'm meaning it. It's not that you target 80, you will get 50. No. You target 80, you should get 80. For getting 80 plus, this particular material, what I'm going to give you, this particular material will truly help you. This is totally 440 pages material, and in this material we eliminated, if you see CMA final study material, board material, if you see, there is a lot of content which is repetitive. We eliminated that to maximum extent. We eliminated repetitive content, unnecessary content, all that we eliminated, but 90% we retained it, and we simplified it. Like this particular material is like, powered by AI. So we use this material plus AI tools, and then we make it. We take in CMA Institute source, and we use certain AI tools, ChatGPT, all that, and then make this material. And then finally we rectify what are all, we do improvements a lot. So totally 440 pages. And even in CMA, there is something called 3/4 strategy. There is something called 3/4 strategy, which is unique for us, okay, which I will discuss later. What 3/4 strategy? 3/4 strategy is nothing but out of 18 chapters, no, you just have to focus on 13 to 14 chapters. Some 3-4 chapters which are generally little big and also have a weightage of 25 to 30 marks. You don't have to touch it all. You should touch them only after you finish 3/4 syllabus. Only after you finish 3/4 syllabus, you should touch them. And practical computation is there, right? I am going to keep it under 1/4. That's a last priority for us, because cost audit anyhow we are very good at, cost accounting anyhow we are good at, and we will also discuss in depth. Theory predominantly we will focus. Understood? Because that is something many students neglect. That's the reason I want to focus more on the theory. Cost accounting anyhow you know well, so that anyhow we'll discuss also at last only. Nothing but, if you see, we have totally 18 chapters, right? The second chapter and the fourth chapter, only these two chapters contain problematic discussion. These two chapters only contain problematic discussion. And what is the weightage of those two chapters? If you see here, second one, 10%. 10% of what? 128 marks. You should not calculate out of 100. Okay, 10% of 128 marks. So somewhere around 12 marks. Okay, and even you see fourth and fifth put together 10%. These two put together, the weightage is 24 marks minimum. This is minimum weightage. Sometimes they may ask more also from each chapter. So this is a minimum weightage which in exam you will get. Now, so coming to the materials, this material is absolutely sufficient. You don't have to touch any other material. And two, I will also give question bank. Question bank in the next class I will show you. Question bank, where in the question bank CMA related solved case studies, MCQs, exercise questions, and also past exam questions of 5 attempts. All past 5 attempts we are including. That's enough. You don't even touch before world attempts. See how many past exam question papers you need to solve in CMA. You ask me, June 23 onwards only, because the syllabus is released in 2022. First exam happened in June 2023. Before attempts, no, irrelevant. They are irrelevant, useless. Don't even touch that. If at all any of your seniors or juniors are coming and telling you you have to solve 10 attempts papers or 20 attempts papers, they don't have brains. Because syllabus changed, and it has changed drastically. Not a minor change in the syllabus, there is a major change in the syllabus. The old syllabus related, that question papers, that and all, irrelevant. So 2023 June, 23 December, July 24 July, and then December, and 25 June. So past 5 attempts only we have right now until recent June 25. Even once December 25 exams are over, I will do that. I will add in our application also, as well as on YouTube, that paper analysis video, all that I will be uploading. So by the time you're doing June 26 exams, for you, past 6 attempts will be. And whatever the classes right now we are going to discuss, you can absolutely rely upon this until 2020 for these classes are relevant. Clear? Got an idea? Now let's briefly look at how the paper pattern is. You see here, this is June 25 latest. Okay, final examination June 25, and first 10 questions will be there of 2 marks each, theory questions, theory based MCQ. Then we have another 10 marks which is practical based MCQ. See here. Here again you have a practical problem will be given. So practical problems. So out of 30 marks MCQs also, 10 marks is 10 marks is problematic. 20 marks is theory. And in the entire descriptive paper, right, 20 marks only will be there for problematic. Rest again balance 78 marks is only theory. So this is a total 15 MCQs you will have, 2 marks each, 30 marks. Now you see section B. So the paper is having 2 sections. Question paper will have 2 sections. Section A which is MCQ, section B which is descriptive. Now you see, answer any 5 questions out of 7 questions. Each question will have a weightage of 14 marks. And here no, they continue the serial number like here question number 2 it starts with. Okay, question number 2. Question number 1 according to them is MCQs, which have 15 sub questions. Understood? So you see, like what are the general objectives of cost audit? This is first chapter. Like we will do this analysis later, not now. Okay, so like this they'll give you, and I'm telling you it's very easy. Just to that, by listening to the class, you don't even have to read later. Just by listening to the class, after going to the exam, directly you can go and write the exam, and trust me, you can score 60 plus pakka with one solid revision, where I will give marathon also. With one solid revision using that marathon, pakka 70 plus you can score. CMA final audit is pakka. And whether you can score 80 plus or 90 plus depends upon your perfection level. The more perfectly you prepare, the better. And I'm telling you, securing an all India rank in CMA final is quite easy. That too in this distracted world. You know, the competition for leading is very less today. So those who are giving utmost attention and focus, 99% guaranteed that you will end up. So do work hard. Not technically hard work also. You're just sitting and listening. You have to work hard. So no. So do listen to the classes carefully and then implement whatever we are going to tell in the class. And last disclaimer, all the classes whatever we are providing, try to attend each and every class. For online, most important thing, don't randomly go to some chapter and then open and no. You're buying online class, right away watch from the day one, whatever in the same order we uploaded. Whatever the order we uploaded, in the same order you need. So no deviations at all. And you also, whoever is coming face to face, attend regularly. 99.99%. Don't get absent. So this introduction is what I want to give. And regarding material I clarified, regarding weightage I clarified, and regarding how the CMA final audit is different from CMA internal audit, now we need to start the act. Okay, I will call this as introductions. I will stop this and then. So we'll continue the discussion. Now let's continue detailed rules on cost records and cost records and audit rules. Okay. Now these rules are called as companies cost records and audit rules 2014, and later some amendments came to these rules. Accordingly, amendment rules were issued in 2019. Remember that we discussed at beginning, yes or no? Now, so companies that have already filed CRA in cost audit report in form CRA 4 for the financial year, they are not required to file again for the same year. This is when the rules was brought initially. So this point you can strike off, not required. This was old provision. That is a procedural rule which is already over. Okay, next. Definitions. Act refers to Companies Act. Cost accountant in practice means a cost accountant holding a valid certificate of practice under Cost and Works Accountant Act 1959. Cost auditor is nothing but a cost accountant in practice appointed by board of directors as a cost auditor for the company. Correct? Cost audit report. This is nothing but a signed auditor's report on cost records and cost statements. Cost records, they are nothing but books of accounts. Cost records are nothing but books of accounts, but these records will contain details about raw materials, employee cost, labor, utilities, utilization, all that, yes or no? So these are books of accounts that are related to utilization of material, utilization of labor, utilization of other items for cost of production or services. Next, Forms refers to the forms annexed to these rules. Ind AS means Ind Accounting Standard. Institute refers to ICAI, Institute of Cost Accountants of India. Yes or no? Then applicability for maintenance of cost records. Applicability, now very important this provision is, okay? Applicability for maintenance of cost records. Certain class of companies must maintain cost records, and this apply to whether the company is Indian company or a foreign company, doesn't matter. They are basically operating in India, they are basically manufacturing in India, they are basically producing service in India. So it may be an Indian company or it may be foreign bound, foreign owned company, it doesn't matter. You are running business in India, you are manufacturing in India, you are producing services in India, so you have to maintain cost records. When they should maintain, turnover criteria is given. If total turnover in the preceding financial year exceeds 35 crore, if total turnover in the preceding financial year exceeds 35 crore, in the current year a company has to maintain cost records. And remember, once cost records maintenance is applicable, I guess it is applicable forever. Okay, cost records applicability is like a forever. Once it is applicable forever, the company has to maintain. But audit, no, it depends upon previous year turnover, previous year details. Okay, it may be on a year to year basis. Okay, that's it. But that point is not covered in our CMA study material, not required also. Okay, now the requirement is applicable only if that company, only if such company, first they must be engaged in production of goods, or they must be engaged in providing services. That's why airline companies and all have to maintain cost records. Many companies that are there in service sector has to maintain cost records. IT companies are exempted. IT companies are exempted because for them consumables is not predominant. Those service sector means those service sectors where consumables is predominant, they have to maintain cost records. Generally, thumb rule is, you are a service, you are at the end of the day you are providing service, but you also consume lot of resources in providing the service. Airlines, for example, they consume lot of resources in providing passenger service, transport service. They consume a lot, they buy a lot of material, all that, so they may have to maintain cost records. But an IT company, they don't buy any consumables much. Yes or no? So they may not have to maintain cost records even though they are producing services. But anyhow, which companies are liable to maintain cost records, which companies are not liable to maintain, that lists are already given, and that list need not be important unless it is covered in our syllabus. Clear? Next, so they must be engaged in production of goods, or they must be engaged in provision of service specified in the notified table. In the table they have notified a list of goods, list of services for which cost records have to be maintained. Next, not only the first one is that one, you must engage in production or service. Suppose what if the company is purely engaged in trading? They don't require, first condition failed. So two conditions here. First, either manufacturing or providing service as per the prescribed table, and have an overall turnover of how much? 35 crore or more from all the products and services. Remember, here all products you should take. Sir, a company is there, it is manufacturing various goods, but some goods are covered in the cost records table, some goods are not covered. Now turnover of last year 35 crore is there, right? Should I take it only from cost records applicable products, or should I take from every product? Every product. For applicability purpose, all total turnover you should take. Understood? Now look at, see, a company is manufacturing or a company is providing services. These companies have to maintain cost records. Now these companies will be manufacturing two types of products or two types of services. Type 1, those covered under cost record rules. Okay, where they have to maintain records for these products only. The company has to maintain records only for these products. Or they might also be dealing with type 2 products where records not required. Are you getting it? Now the question is, the company is manufacturing these products, right? Now for this cost records has to be maintained, right? When they should maintain? If 35 crore turnover crossed in the last year, correct? In the last financial year, total turnover should be more than 35. Now, when you are taking turnover, will you take only type 1 goods turnover or type 2 goods turnover or total turnover for comparison purpose? Total turnover. For example, last year from type 1 25 crore turnover is there, from type 2 20 crore turnover is there. Technically speaking, type 2 products, no, they are not covered in the cost records rules at all. Type 1 products only covered in cost record rules. Okay, last year this is the data. Now in the current year, they are asking you, because type 1 products are covered under cost record rules, is the company liable to maintain cost records? They asked you this question. You should see total turnover of the company last year. Last year, when you are checking 35 crore, is it covered in cost records? Whether the product is covered in so and so, doesn't matter. Even this company might have been trading with some goods also. Like the company might have already bought some goods and they're just reselling, trading also. Trading turnover also you should consider in 35 crore. The turnover from all its products, all its services has to be considered. Total turnover has to be considered for checking cost record applicability. Here it is more than 35 crore. Cost records applicable. Now in current year, I should maintain cost records, right? For which products I will maintain? Only for type 1 products I will maintain cost records. Understood the provision? Now look at so have an overall turnover of 35 crore or more from all the products and services during the immediately preceding financial year for which you are checking. Okay, today you are checking, this year you are checking, so immediately preceding financial year you should apply these limits and then check. And these companies must include cost records for which products? Only for relevant products or services in their books of accounts. Only for relevant products only cost records has to be maintained, not for every product. Are you clear? Yes or no? Now there is a list which is given. Regulated sector, non-regulated sector, there is a list which is given by CMA Institute in the CMA material. Just for one time reading, I just refer the page number here. Okay, now so let's go to that list. 1 minute, I'll open it and then just show you. Now let's look at the list table. Just a minute, it's loading. Yes, so this is the table. Okay, so look at the section as per ICA book also. The class of companies including foreign companies engaged in production of goods or providing services having an overall turnover from all its products 35 crore or more during the immediately preceding year. See how tricky the paragraph here. So that's, but you see how beautifully we broke down it. Understood? Next, now look at, so which are contained in the table. Now they have divided the products and services into two parts. All these are covered. For all these products you have to maintain, but from regulatory perspective, these products and services are broadly categorized into regulated sector, non-regulated sector. Okay, fine. You just have to remember regulated sector. Very easy. What are all covered? Telecommunication services. Okay, so telecommunication services, it's a regulated sector. Generation, transmission, distribution and supply of electricity. Oh, generating companies, electricity generating companies, distributing companies, supplying companies, everything is covered. Able to understand? We have seen somewhere in past exam questions, which of the following is covered in the regulated sector? Electricity generation or distribution, or like that some option MCQ was there. So all are covered. Generating companies covered, distribution covered, transmission, distribution, supply, all of them are covered. Generally, transmission and distribution companies are one and same. Transmission and distribution companies are one and same. We call them as GenCos, I think. GenCos we call it. Generation companies or distribution companies, like that. There is a big issue going on because they were not getting amount pending from governments, many governments. So electricity GenCo companies, some issues are going on. Okay, fine. Supply of electricity means once it comes to the local station, from there to your home somebody will supply, right? That's one. Okay, most of the times this entire supply chain will be taken care by Power Distribution Corporation Limiteds. In every state you will have Power Distribution Corporation Limited. For example, you just open your electricity bill, you will find Power Distribution Corporation Limited. That itself transmits, distributes and supply the electricity to your household or commercial purpose. Generation companies are different. These companies are wind companies, thermal companies, yes or no, Coal India, National Thermal Power Corporation, these are all generation companies. They don't participate in distribution directly. Understood? And electricity distribution companies and supply companies, 99.99% they are state government owned. They are what? State government owned government. They are all government companies. That too, which government owned? State government owned companies. That too, ownership how much? 99.99999%. Just some 5-6 shares will be there in the name of the directors for the sake of minimum number of members, 7 members requirement. Okay, nominee directors, we call them as what? Nominee directors. Fine. So third one, petroleum products. Okay, petroleum products including activities which are regulated by Petroleum Natural Gas Regulatory Board, drugs and pharmaceuticals, fertilizers, sugar and industrial alcohol. Only 6 companies are regulated sector. Only 6 entities come under regulatory sector or regulated sector. What are all come under regulated sector? Telecommunication, electricity, petroleum, pharmaceuticals and fertilizers, sugar and industrial alcohol. Sugar is also regulated. Why? Because it produces a lot of ethanol. Okay, sugar, it's not the objective here is not to regulate sugar but ethanol production. Understood? Which is a very important fuel now. Okay, so right now E20 engines are there. I hope every one of you know, today you buy any two-wheeler, it's an E20 engine where 20% ethanol will be mixed in the petrol and still the engine supports. Okay, if at all, most of the vehicles that we see in our day-to-day life are E10 engines. Most car engines, everything is E10. But now E10 manufacture only in India, in the cars, Maruti Suzuki has adopted E20 engines by 2025. Many other companies have not yet adopted E20. First of all, E20 or E10 is a petrol-based engine. It's not diesel engine. It's a petrol-based. That's it. So 6 industries: telecommunication, electricity, pharma, fertilizers, sugar and industrial alcohol, petroleum, natural gas, all that. Are you clear? Now, just for the sake of an idea, if this list is small, you so big. So how many were there? 33 were there. We'll just briefly see this. Okay, non-regulated sector, we'll just briefly see this. Machinery and mechanical appliances used in defense space, atomic energy sector. So they are all non-regulated. Okay, excluding any ancillary item. Okay, turbojets and turbopropellers, arms, ammunitions and explosives. Oh, defense related manufacturing is fully non-regulated. Okay, propellant powders, prepared explosives, safety fuses, radar, all this entire initial 5, even 6th one also, pilotage, hauling, mooring, removing, aeronautical services for air traffic management, until 8th one, it's completely related to defense, until 7th one. Then 8th one is regarding aircraft operations, all that, airlines, they come under non-regulated. Iron and steel, non-regulated. Roads and other infrastructure projects, rubber companies, coffee and tea companies, railways, cement company is also non-regulated. Ores and mineral products, non-regulated. Mineral fuels, mineral oils, non-regulated. Base metals, non-regulated. Jute and jute products, edible oil, all this. Construction industry, health services are non-regulated. Education, non-regulated. Milk powder, non-regulated. Insecticides, non-regulated. Plastic, tires, pulp and paper, textiles, glass, other machinery, electrical and electronic machinery, production or import or supply or trading of the following. You see, this is something important. Production or import and supply or trading following medical devices. If at all you're dealing with the following medical devices, that also, even if you're trading, you are liable to maintain cost records. Understood? You may be liable for cost audit. That's it. And nothing contained in so and so will apply to foreign company, provided for nothing contained in this rule shall apply to a company which is classified as MSME. Okay, as per turnover criteria, if a company is a micro enterprise or a small enterprise, they are exempted from maintaining cost records. Able to understand? Even cost audit, see, the moment cost records itself is exempted, automatically cost audit is also exempted. That's it. Now look at, now we got a good idea, no? Yes or no? So regulated sector alone, you remember, that's enough. Any other company is a non-regulated sector. What are the regulated sector? Once again, telecommunication, electricity generation, distribution, supply, transmission, petroleum products, pharma and pharmaceuticals, okay, and fertilizers, sugar and industrial alcohol. That's it. Okay, so these 6 companies comes under regulated sector and non-regulated. By the way, whether it is a regulated or non-regulated, at the end of the day, for all these products and services, you have to maintain cost records. Yes or no? Now, regulated, non-regulated, why they bifurcated? That is for cost audit applicability purpose. Cost records applicability purpose, all products are one and same. It doesn't matter. But for audit applicability, for regulated sector, criteria is different. For non-regulated sector, audit applicability criteria is different. Are you clear? Now look at applicability of cost audit. Okay, cost audit. For example, a company is covered in the regulated sector, which we have already seen. 6 companies are covered under regulated sector. Okay, what are they? These companies must get cost records audited if annual turnover is 50 crore or more in the preceding financial year. Annual turnover means they are talking about every product that they manufacture. Every product, regulated or non-regulated, leave it. Every product that they manufacture, every service that they provide, trading, everything, total turnover of the company in the last year is how much? 50 crore or more. And look at, and aggregate turnover for individual products or service. Individual product or service means which product or service? Those comes under regulated sector. Those products which the company is manufacturing and falling under regulated sector, and that is just 25 crore or more in the last year. Total turnover is 50 or more. But from individual products and services that comes under regulated sector is 25 crore and more, then the company is compulsorily liable for cost audit in the current year. Now let's look at a practical example, just a normal example. Okay, for example, cost audit applicability for companies which are covered in regulated sector. Okay, suppose no, there is a manufacturing company. Okay, this manufacturing company is dealing with 3 types of products. Okay, now type 1 products where no cost records itself is applicable. These products are not covered in regulated, non-regulated, now nowhere. Last year turnover is 10 crore. Type 2 products where cost records are applicable plus regulated sector. Okay, those products. Another category of products where cost records are also applicable and they are covered moreover in regulated sector. For example, this company is an agri producer company. This company is an agri producer. Type 1, vegetables they are producing. Type 2, sugar and industrial alcohol they are producing. Understood? Sugar and industrial alcohol they are producing. And from this, the turnover is, let us assume 27 crore. How much is the turnover? 27 crore. And they are producing type 3 non-regulated sector related products also. Some products related to non-regulated sector. Okay, where the turnover is 20 crore only. Now this information is in the financial year 23-24. Audit over, everything is over. Now the question is, for 24 and 25, is the company liable for cost audit? This is the question. Is the company liable for cost audit is the question. Very simple. Type 2 products, individual product and service is 25 crore or more. Total turnover is 50 crore or more. You should not see only these 2. You should see turnover from all its products and services, annual turnover. If you see, total it is more than 50. Individually from these products and services it is more than 25. Automatically they are liable for cost audit. Are you clear? All of you? Now look at, now let's discuss the next one. What about non-regulated sector? What about non-regulated? See, if at all no, here the company is manufacturing both regulated and non-regulated. Regulated and non-regulated, both they are manufacturing. The moment if cost audit is applicable, it is applicable on entire products. Entire cost records has to be audited. Are you getting it? If audit is applicable, type 2, type 3, both are liable for audit. Able to understand? Suppose Type 2, criteria failed, 24 crore only it is there. Total is more than 50 but less than 25. Audit is exempted. For both of them audit is exempted. Understood? Suppose no, here it is not 20. For example, here it is not 20. Here it is, let us assume here it is 60 crore. For example, here it is 60 crore and I will just change this example. Okay, here it is 24 crore. Okay, now the company is manufacturing normal, regulated, unregulated. Total turnover is how much? Let us assume this is 20. Let us assume this is 20. Total turnover is how much? Crossing 100. From regulated, less than 25. Total turnover is crossing 50. From regulated, total turnover is crossing 50, but from regulated less than 25. So audit is not applicable as per regulatory sector. Now I am checking non-regulatory point of view, audit applicable. Non-regulatory point of view, they are manufacturing more than 35 crore and total turnover is more than 100 crore. Therefore again the company is liable for cost audit. Generally, in reality, a single company will not deal diversified products like this. They will incorporate separate companies. For this they will incorporate separate company, for this they will incorporate separate company, for this they will incorporate separate companies. Able to understand? Some companies know what they cleverly do. If at all turnover is very big, what they do, they split into multiple companies and they claim exemption from cost audit. So they don't have to disclose data. Some companies they don't have to disclose the data. This is one of the reasons why some companies have a complex chain, complex structure. See, cost data is so privacy. Yes or no? Company cost information is a very confidential information and you are giving it to the government, which is a public portal again. Able to understand? So what some companies do, if at all they're manufacturing multiple products, they diversify and then they incorporate multiple companies, and one of the reason why they incorporate is they will get exemption from this. Able to understand? Same management, same shareholders, but a different corporate identification number, and because of which cost audit is exempted, cost records are exempted, compliance cost can be reduced by splitting into multiple companies. One of the reason, I'm not saying this is the reason why companies incorporate multiple companies. No, I'm not saying that people establish multiple companies not for this. This is one of the reason. Are you clear? Next. So companies covered under non-regulated, when they should get audited, they must get cost records audited if annual turnover is 100 crore or more, and aggregate turnover for individual products and service. Individual products and service means what? Relevant products and services, nothing but. They actually use the word not individual, they use the word relevant. They technically use the word which word? Relevant. So relevant products and services, the turnover is 35 crore in the preceding year. Then they are liable for cost audit. Able to understand? Now, there are some companies, exemption from cost audit. Companies are not required for cost audit if revenue from export is exceeding 75% of the total revenue. Revenue from exports, if it is exceeding 75% of the total revenue, even though the company total turnover is more than 100 crore, even though the individual product turnover is more than 35 crore, even though it is more than 25, more than 50, doesn't matter. That company has thousands of crore turnover, doesn't matter. Predominantly the company has exports, therefore it is exempted from cost audit applicability. Remember, this exemption is from audit, not from cost records. Cost records is always applicable. Cost records are exempted from who? For whom? Only for micro and small enterprises. Actually, here I told you to refer list, right? Better we will add one sentence here. Okay, in your book also tomorrow, once you get the book, you please add a sentence. What sentence you will add here? For a company which is a micro and small enterprise is exempted from maintaining cost records. Maintain, add that word. Micro and small enterprise is exempted from maintaining cost records. All the records are exempted. And basically cost records are applicable for which companies? Only when the turnover is exceeding in the last year 35 crore. By definition, micro small, their turnover is less than 25 crore. By definition, Micro and small enterprise turnover. When a company is called as a micro, when a company is called as a small, turnover is somewhere around 1 crore, 5 crore, 10 crore, 25 crore max. Then only it's a micro and small. If your turnover in the last year is 35 crore, why are you called as a micro now? Logically, exemption need not be seen. We don't have to see that. Are you getting it? This is conceptual learning. Okay, na? Like mugging up, micro small is not required to maintain cost records. First of all, micro itself means less than 10 crore turnover. Small itself means less than 25 crore turnover. Understood? Some turnovers pakka less than 25 crore. Both the companies. Then only they are called as a micro and small. If turnover is crossing 35 crore in the last year, it's no more a micro enterprise. It's no more a small enterprise. It first of all does not come under MSME. Then automatically cost records are applicable. Able to understand? That's it. But still, since they gave that point, see further, nothing contained in this rule shall apply to a company which is classified as micro enterprise or small enterprise as per turnover criteria established under MSMED. Remember, it's not for medium enterprise. Medium enterprise is liable. You see, MSMED Act is what? Micro, small, medium. But exemption is available for micro and small and not to medium. Able to understand? So for that reason, what we will do is micro small, that point will write here. It is there, huh? Yeah. Where it is mentioned? Somewhere, yeah. That's what I saw. No. Yes. Above, no. Briefly we discussed at one place. Yeah, there it will be. Here, above this. Yes, here it is. Okay. Micro enterprises, small enterprises, they are excluded. Okay, they are excluded. Now here, no, better clarification. Medium enterprises not excluded. Okay, for a better clarification, I should have added that. I missed it. It's okay. In my next session, I'll add it. Okay, so clear all of you? That's it. So this kind. Now you remember income tax 43B section. Certain expenses are allowed as deduction only when they were actually paid. This section is applicable for an SSE who is following mercantile basis. 43B section is applicable for an SSE who is following mercantile basis, where he is computing income under PGBP on mercantile method. Only for him 43B is applicable. Inside that, clause number H. If at all you have to pay to micro enterprise, if at all you have to pay to a small enterprise, there also micro and small only covered, not medium. In 43B clause H, I am paying some money for purchasing goods and services from MSME, micro and small, not medium. If I pay them within 15 days or 45 days, as the case may be, then only I will get deduction. Otherwise, I will get deduction in the year in which it is actually paid. That's the provision. Okay, in 43B clause H, that's the provision. We'll see that in DT. Okay, that's it. Fine. I'm just reminding you, there also micro and small only covered, medium is not covered. Okay, now next. Now we'll ask ChatGPT like micro small enterprise meaning as per MSME Act latest limits. Okay, we'll just see that. Latest limits. Yeah, now that is actually increased, you see here. Okay, so how much it is? Micro 2.5 crore to 10 crore maximum turnover limit. Small enterprise is now 100 crore. This is recently revised. Earlier this is not the limit. Okay, so right now there is a possibility. That you are a small enterprise as per MSMED law, but last year your turnover is just 40 crores, but not 100, not crossing 100. See, suppose my company, I'm manufacturing some products and services which comes under regulated or unregulated, non-regulated. Turnover, total turnover in the last year is 45 crore. Now, am I liable for cost records? Yes, technically yes. But am I falling under micro small enterprise definition as per the latest updated definition? Yes. Therefore, you are exempted. Once upon a time it is not. That's the reason immediately I got it out, because in the recent income tax law, Finance Act 2025, micro small enterprise definitions were revised. Recently they revised it. Okay, now let me even show you that. Just 1 minute. Now look at, yeah, I think I already released a new income tax book. Yes, here you see May 26 exams, CA inter book it is. Okay, for CMA students it is applicable for June 26 exams. Now you see, it's okay. Micro, yeah, you see this Finance Act 2025, this limits was recently updated. It was not updated earlier. Now the small enterprise limit is what? 100 crore. It's a very good thing actually. It's a very good thing. Okay, very recently this got updated. So initial I told a logic, no, we don't have to check 35 crore limit for micro small. No, we should check this. Okay, so right now for micro enterprise, no, you don't even have to check cost records applicability, because the turnover is anyhow less than 10 crore. It is classified as a micro. So if a company is classified as a micro enterprise, straight away cost records are exempted. Okay, now what about small company? They are also exempted, but turnover limit you need to be careful. What is a small company right now as per Micro Small Medium Enterprises Act? What is a small company? Turnover is not exceeding 100 crore, which means for a small enterprise turnover can be more than 35 crore. Technically speaking, cost audit is applicable, yes or no? But now it is not applicable. Able to understand? Now it is not applicable because 100 crore limit is there for small enterprise. Automatically the company comes under micro and small category, automatically comes under exclusion. Automatically it comes under exclusion, even though the total turnover is more than 35 crore. When cost records itself is exempted, fundamental logic, audit is also exempted. In audit, micro small not covered, no. You may say micro small not covered, so audit is applicable. Where is records? Where are the records? That's why they don't say specifically. Cost audit is applicable when the cost records are maintained and limits are satisfied. Are you clear? Yes. If a question is twisted on this, people will suffer, because nobody knows amendment happened in micro and small. Very recently that amendment happened. That's why immediately I opened and saw. Clear? If you see my old income tax book, which is applicable for your December exams, whoever is writing CMA final, CMA inter in the December 25, for them micro small limit definition is different again. I will show you, wait. Yes, you see micro and small, 5 crore, 50 crore turnover. You understood? This is definition is revised recently, just some 3-4 years back. That before again it is different. That before it was even lesser. So right now a small enterprise means turnover up to 100 crore. So it's actually a very big relief for businesses. Up to 100 crore you're called as a small enterprise only. You are covered under MSMED law. Okay, that's it. So confident? Just 1 minute. Yeah, okay. So now I will just write, okay, micro enterprise. When a company is called as a micro enterprise, when the turnover is less than or equal to 100 crore. Actually their investment in plant and machinery criteria is also there. Two criterias: investment in plant and machinery and turnover. These are the two criteria whether a company comes under micro or small or medium. They talk about investments. In ChatGPT also it is already shown, I guess so. You see, investment in plant and machinery maximum is 2.5, 25, 125. Whereas this one 10, 100, 500. That's it. So now cost records have to be maintained by a company by default if total turnover is crossing 35 crore in the last financial year. However, if the company falls under micro company definition or small company definition as per MSMED, then it is exempted from maintaining cost records. Naturally, it is also exempted from applicability of cost audit. Next. Now let's look at exemptions again. Now, by the way, cost audit applicability. If a company is manufacturing any products that fall under regulated sector, then how to decide cost audit applicability? Point number 1. Total turnover is not exceeding, total turnover is more than or equal to 50 crore. Yes or no? 50 crore in the last year. And from relevant products and services, the total turnover is more than or equal to 25. Whereas non-regulated products, if you are manufacturing predominantly, then total turnover criteria 100 crore in the last year. From the relevant products and services, the turnover is 35 crore. Are you clear? Regulated sector, more focus is required. That's why limits are smaller so that audit is applicable. Non-regulated, that much focus not required. That's why bigger limits were given. Bigger relaxation is given. Understood? All of you? Yes. Next. Now, again, even though if a company comes under 25 crore, 50 crore, 35 crore, 100 crore, even though the company is satisfying, still they are exempted from cost audit. When? If major substantial turnover is from forex, exports. If revenue from exports in foreign exchange is exceeding 75%, substantial turnover is more than 3/4 turnover is from exports in foreign exchange, you are exempted. Company is operating in special economic zone, or a company is engaged in electricity generation, regulated sector, but they are generating for self-consumption, captive consumption. Many companies, they have solar plants, they generate electricity, but the solar electricity generation is for their internal purpose. Many IT companies have solar plants. So can you say IT company, you are generating electricity, you are regulated sector? No, we have solar plants for our self-consumption. Yes or no? Through captive consumption, captive generating plant. Captive generating plant means what? It is defined in electricity rules. Are you clear? So applicability of cost audit, applicability, regulated sector, overall annual turnover during last year is exceeding 50 crore and revenue and aggregate turnover of the individual products and services is exceeding 25 crore. Further exemptions, you see all exemptions I kept in green box. Okay, so all exemptions, rule 4 will not apply, only rule 3 will apply. What do you mean by rule 4 not apply, rule 3 apply? Rule 4 audit does not apply, rule 3 records will apply. Cost records will be applicable as per that criteria. Okay, next, non-regulated, overall turnover is more than or equal to 100, aggregate turnover from individual products is more than or equal to 35 crore. That's it. Accordingly requires cost audit under rule number 4. Easy, all of you. Then maintenance of records. We'll take 5 minutes gap and then continue. Yes, 5 minutes, we'll just take a gap and then continue. So let's continue the discussion. Regarding cost audit, there is one important clarification that we need to check for. Cost audit applicability. I hope you remember cost audit applicability is different for regulated sector companies products and for non-regulated sector, correct? Like what is the criteria? Non-regulated sector, total turnover, yes or no, shall be more than or equal to 100 crore and turnover from individual products and services, okay, it should be more than or equal to 35 crore. Whereas regulated sector, the total turnover shall be more than or equal to 50 crore. Individual product and service turnover is more than or equal to 25 crore. Now, I missed to convey this point. Individual product turnover means what? Okay, both table A plus table B products, both you should take. If you see the provisions of the law, what they say, individual products and services, turnover from individual products and services that are covered under rule number 3, they say. See, rule number 4 is talking about cost audit applicability, whereas rule number 3 is talking about cost records applicability. Cost records have to be maintained whether the company is part of regulated sector or non-regulated sector, doesn't matter. Cost records has to be maintained if the last year total turnover just crosses 35 crore. Yes or no? Agreed at this point? So, and by the way, regulated, non-regulated, between these two sectors only, entire products and services that are liable for cost records, that are liable for cost audit were covered in these two tables only. Table A deals with regulated sector. Table B deals with products that are under non-regulated. Table A, we know 6 products were there. 6 items were there. Pharma items. Okay. Then we have seen sugar and industry, alcohol, electricity. The first one is this one. Defense, no, defense is there in the below only. Defense is there in the below. What are the products that we have seen? Telecommunication. Yes or no? 4 we figured out. So there are 2 more products. So telecommunication, sugar and industrial alcohol, fertilizers. Remember, fertilizers, 5th product. There is 1 more product. Fine. Anyhow, we'll come back to that. Okay, that list. So rule number 3 talks about cost records. Rule number 4 talks about cost audit. Now, if you see here, the actual phrases in the law. Okay. Total turnover of the company, it may be from table A, table AB or some other product, doesn't matter. It should be more than or equal to 50 crore. Whereas here also total turnover must be more than or equal to 100. Now we have 25, 35 criteria is there, right? Which product turnover I should see? We actually discussed briefly that here table A product we should see, here table B product we should see. No, it's actually both. In both the cases you should see table A plus table B. Total products, total turnover from products that are covered under rule number 3, nothing but. Total turnover from products that are covered under rule number 3. If at all they cross 25 crore, but not crossing 35 crore, then for table A products, audit is required. I will cover the other provision also, then I will summarize, then you will get more clarity. Same way, when I am checking for non-regulated, if total turnover from table A product and table B product, okay, if at all it is crossing 35 also, are you getting it? Then cost audit is applicable for table A as well as table B both. But here there is a twist. Okay, here there is a twist. Fine, we'll do one thing. Okay, regarding this, to get a clear idea, institute has given 5 case studies. Okay, 5 solved case studies they gave, which are different permutations and combinations. So that we will solve so that we will get a better idea. Okay, now, so just 1 minute. Yes, so in our question bank, second chapter. Okay, in our question bank, come to second chapter, solved cases. We have 5 illustrations here, 5 cases. Okay, you see, let's see one by one and then understand the provision. XYZ and Co Limited, they furnish us the following information regarding immediately preceding financial year, just before financial year. Turnover of table A products is 6 crore. Turnover of table A products as per rule number 3, nothing but. So it is 6 crore. Whereas turnover of table B products under rule number 3 is again 9 crore. Turnover of other products is 18. 6 plus 9 plus 18 is equal to 33 crore, correct? So total turnover of the company in the preceding financial year is just 33 crore. Now find out cost records applicability. Not applicable, because in the preceding financial year the total turnover from all the products and services is less than 35 crore. When cost records have to be applicable? If the preceding financial year turnover is 35 crore or more, then cost records is applicable. We are not talking about audit. Then what about cost audit applicability? Records itself does not apply. Where is the question of cost audit? Audit does not arise because records itself the company is not supposed to maintain. Agreed. Now look at, in the case the following positions emerges, nothing but these are the following is the conclusions. Overall turnover is just 33 crores, which is less than or equal to 35 crore. Therefore, cost records are not required to be maintained for table A as well as table B products. The moment cost records is applicable for all table A products and table B products, the company has to maintain the cost records. Since cost records are not required to be maintained, the question of cost audit does not arise. Easy. Yes or no? Now next question. Same, ABC Limited furnishes the following information regarding immediately preceding financial year. Turnover of table A product is 7 crore. Turnover of table B product is 8 crore. Once again, I'm telling you, table A is dealing with regulated sector. Table B products contains non-regulated sector, but both are liable to be covered under cost records purpose. They both are covered. Yes or no? And total turnover of other products is 24. 7 plus 8 plus 24 is equal to approximately 39 crore. Okay, now look at first question. Cost records applicability, they are asking. Yes, it is applicable. Since the total turnover of the entity, yes or no, in the preceding financial year is exceeding 35 crore. Here, no, you don't have to see table A or table B, that and all you don't have to see. You don't have to see. Table A product turnover, how much? Table B product turnover, how much? This reference is required for audit applicability. But for cost records purpose, total turnover I will take. Company's total turnover I will take. For example, company is manufacturing or providing services where table A, table B does not come at all. They are not at all manufacturing table A, table B at all. Only other products. They don't have to maintain cost records at all. Cost records will come when the moment when you are manufacturing or providing services that fall under table A or table B or both. At that time, how do I see whether cost records has to be maintained or not? I will see total turnover including table A, table B products related turnover in the last year. If that is exceeding 35 crore or equal to 35 crore, then cost records has to be maintained. Suppose if the company is not at all manufacturing table A, table B products, they're not at all dealing with these rules, the question of cost records, cost audit again does not arise. Correct? Logically? Yes. Next. Now again they're asking cost audit applicability. Now look at cost audit applicability. Here you see. Now first I will apply regulated sector logic. Okay, regulated sector logic. Regulated sector total turnover shall be more than or equal to 50 crore. Here how much it is? 39. Okay, so automatically audit may not be applicable. Now look at. Yes, you see now. Overall turnover is 39. That is more than or equal to 35 crore. Therefore, cost records have to be maintained for both the products, table A as well as table B products, irrespective of individual turnover of each of the product. Correct? Now you see overall turnover is 39. That is less than 50 crore. Yes or no? And aggregate turnover of products covered under rule number 3 is 15. Like here, table A how much? 7 crore. Table B how much? 8. So individual turnover from individual products that are covered under table A plus table B is less than or equal to here 25, which is less than the threshold limit of 25. And since the conditions under sub rule 1 and sub rule 2, yes or no, are not fulfilled, cost audit is not applicable for products both table A as well as table B. And we'll cover remaining 3, then we'll derive once again the provision. Okay, now next. BK Private Limited furnishes the following information in regarding preceding financial year. Remember, company public limited, private limited, there is no difference. Cost audit, cost records, cost audit, the applicability is uniform for everybody, even for government company, non-government company, all that. Cost audit only is exempted for a company if turnover from exports is more than 75%, or it is operating in cess, or it is a cost records is exempted for micro small enterprise. Yes or no? So like that some exemptions were there. Or cost audit is exempted from for a company which is producing electricity for captive consumption. Correct? Yeah. Next now. Turnover of table A product is how much? 11. Turnover of table B product is how much? 14. Total turnover is how much? 28. Definitely more than 35. Yes or no? Cost cards, yes, applicable. Cost cards is applicable. What about cost audit? What about cost audit? Now you see this one is 25 plus 28, which is actually 53. Correct? Now you see overall turnover is 53 crore. And yes or no? And aggregate turnover of products covered under so and so table A, table B, nothing but rule number 3 is exactly 25. More than or equal to 25 is there enough. Now criteria that is relevant for regulated sector is satisfied. What about unregulated sector criteria? Is it satisfying? 100 not satisfied. 35 not satisfied. Since the conditions of rule 4 number 1 they are fulfilled, cost audit is applicable only for table A products, which means the company has to maintain cost cards for both the products, but audit is required only for table A product. Correct? Fine. Next, until now also no confusion. Clear? Next one, turnover of table A 19 crore and turnover of table B product is 15 crore and turnover from other products is 76. Total turnover is more than or equal to 100 crore. Correct? Now, whereas total turnover is 15 crore, but from table A plus table B it is, from table A and table B it is just 34 crore. Now again 100 crossed, but it is not crossing 35, but it is crossing 50, crossing 25. Table A product audit is applicable. Fine, we'll see that. Overall turnover is 110. Yes or no? And aggregate turnover is 34, which is more than 25, but less than 35. Now conditions under 4.1 only fulfilled. 4 rule 2 is not fulfilled. Very simple. 4 sub rule 1 talks about regulated sector. 4 sub rule 2, when cost audit is applicable for non-regulated sector. When cost audit is applicable for regulated sector, 4 number 1. Okay, if at all higher turnover is there, then cost audit is applicable for non-regulated sector as well. Fine, we'll see. And cost audit is applicable only for table A products. Got clarity? Why? Non-regulated sector turnover criteria not satisfied. 35 crore criteria not satisfied, but it's satisfied. 4 sub rule 1 regulated sector, it is having 110, which is more than 50. It is having 34, which is more than 25. So regulated sector applicability limit satisfied. So accordingly cost audit is applicable for table A products. Pakka. What about cost audit applicability for table B products? Total turnover from individual products is not even touching 35 crore. Correct? Able to understand? Now again, even though overall turnover is more than 100 crore, turnover of products covered under rule number 3 is less than 35. That is why table B products are not covered under cost audit. Now again look at turnover of table A products is 20. Turnover of table B product is 22 crore. Okay. And turnover of other products is how much? 63. So total turnover is how much? Approximately 20 plus 22, 42. Okay, 105. Yes or no? 105. Now, cost cards applicable? Yes, applicable. Already total turnover in the last finance is 105. Cost cards is applicable. Now, what about cost audit? Now, 105 crore. Yes or no? Fine. First I will check. Regulated sector turnover. Regulated sector 50-25. Remember, both the conditions has to be satisfied. Non-regulated sector it is 135. Right now it is 105. Okay. Now from this records 20 plus 22. Table A plus table B products turnover is how much? 44. 44. Now you see, is this criteria satisfied both? Yes. So table A products audit is applicable. Now we need to check audit applicability for table B products. In order to apply audit applicability for table B products, the turnover criteria should satisfy these both also. Now total turnover satisfied. Turnover from table E is also satisfied. Oh, which means in both the criterias, both the conditions are satisfied. Therefore, for table B products also cost audit is applicable. Now look at the answer. Easy? Yes or no? Yes, look at. Overall turnover is 105 and aggregate turnover for both the products is 42, which is also more than 35. Since the conditions and 4.1 as well as 4.2 are satisfied, cost audit is applicable for both table A and table B. In other words, if at all a company is satisfying, 100 crore criteria, 35 crore criteria for non-regulated sector, automatically cost audit is applicable for products that are covered under regulated sector. In exam, how should I check this? In the easiest way, how should I check in exam? Now again, so we totally have, okay, cost, records applicability, cost, audit applicability. Records applicability is what? Total turnover. Okay, I will call it as TTO just for the sake of convenience. Total turnover should be more than or equal to 35 crore in preceding financial year from all products. All products means what? Table A products plus table B products plus other products. Okay, if this is the case, cost records is applicable. Now, cost audit applicable or not, I will have to check. Is cost audit applicable or not, I have to check. How I will check, first I will check for non-regulated sector. Easiest way. Okay, now total turnover, is it more than or equal to 100 crore? I will check. Total turnover means what? Table A product turnover, table B product turnover, other turnover put together. Then individual product turnover or service that are covered under rule number 3. Actually they say aggregate turnover from products and services that are covered under table A and table B only. Other products you should not take. Yes or no? Now I will see. Is it more than or equal to 35 crore? I'll see. Yes. This is yes, this is yes. Both the conditions. More than 100 crossed, more than 35 crossed. Then I assume that cost audit is applicable for both table B products and table A products. Suppose no, it is crossing 100 crore but not crossing 35. Then I will have to check regulated sector criteria. It is crossing more than or equal to 50 and check whether it is also crossing more than or equal to 25. More than or equal to 25 also it is crossing. Okay, then cost audit is applicable only for table A products. Understood? So the condition is end between these two. Okay, so regulated sector, total turnover, table A, table B turnover. Total turnover means table A, table B, others. Individual aggregate turnover from individual products and services that are covered under rule number 3 means table A plus table B turnover. So total turnover crossing 50 and also crossing 25. Table A products, cost audit is applicable. Now I need to check table B. Then I should check total turnover crossing 100. Individual product turnover from table A, table B products. Is it crossing 35? If that is the case, then table B is also applicable. Why long route like this? Directly you check that. Yes or no? So if at all cost records are applicable for non-regulated sector table B products, automatically cost records are if cost audit is applicable for table B products, automatically it's an implied assumption that cost audit is applicable even for table A products. In other words, you see how law is drafted. For regulated products, no. If turnover limits are small, that's enough. Regulated sector is covered under cost audit. For cost audit applicability for non-regulated, relaxation is given. Higher turnover limit is given. If at all the company is crossing that higher turnover limit also, non-regulated, the company is manufacturing regulated and non-regulated. If non-regulated itself is liable for audit, obviously regulated is also liable for audit. Correct? But a company where audit is mandatory for regulated, there is no guarantee that non-regulated is also liable for audit. Easy or not? All of you understood now? Crystal clear with those 5 illustrations? Okay, that's it. Now open your book and below this diagram, and for your information, we have given very clearly everywhere end. Okay, so here applicability of cost audit, immediately write refer solved cases, yes or no, in question bank 1 to 5. Refer solved cases in question bank 1 to 5, page number 13, page number 13. Okay, you can write. Okay, understood? Easy, no? Yes, next. So with this, cost records and cost audit applicability questions also we have solved. Okay, that's it. Okay, then we'll continue the next session. Just a minute. Yeah, one small clarification on this, just for material reference purpose. Okay, in the material, I will just once again clear this page. Okay, now when they have given annual turnover, right, what is meant by this? Table A turnover, table B turnover, other products turnover, correct? Yes or no? First criteria purpose. Same here also, annual turnover means what? Table A turnover, table B turnover, other products turnover. Now second criteria is there, right? Aggregate turnover of individual products and services. Here you should only see table A plus table B. Same way, company is not covered and unregulated. There also you should only see table A plus table B. There is a confusion generally. For non-regulated, no. Second criteria, students sometimes thinks that only table B turnover you should take. No. You should take both table A plus table B. Because now if you see the wordings in the law, aggregate turnover of individual products and services covered under rule number 3, they say. They don't say rule number 4 too. They don't say only table fee. They say aggregate turnover from individual products and services that are covered under rule number 3. Cost record applicability wise, what products turnover you take? Are you getting it? Covered under rule number 3 means what? Table A, table B. Both are covered under rule number 3. That's what. Understood? Now again, now cost records is there, right? Cost records are there, right? Cost records applicability is there, right? 35 crore or more is there, right? Here criteria. Yes or no? This you should see table A plus table B plus other products turnover. Correct? All of you? That's it. So this is an important clarification regarding, just in the material you just take a note. Understood? That's it. Even on the diagram also you can make it. So we have concluded one thing. After solving those 5 questions, we understood one thing. If at all cost records, cost audit became applicable for non-regulated sector criteria itself, then automatically cost audit is applicable for regulated sector also. Bigger the turnover, broader the applicability. Are you getting it? If at all turnover is crossing 135, then automatically table A products, table B, both are liable for cost audit. Turnover is not crossing 100 or is not crossing 35, then cost audit might apply only for table A products. Check 50-25 also should satisfy. That's it. Understood? Any one condition fail, cost audit does not apply. Both the conditions, 50 conditions should satisfy, 25 also should satisfy. If both are satisfied, only table A products are liable for cost audit. Suppose no, 50-25 satisfied, but it does not satisfy 135. Any one failed, automatically table A only liable but not table B. That's it. Clear? Everyone? That's it. So